Blockchain Briefing, April 4, 2026. Theme: Blockchain. This issue focuses on the technological evolution, security challenges, and practical applications of blockchain. Core insights center on post-quantum secure on-chain pathways, key variables in market cycles, the impact of crypto assets on real-world payments/supply chains, and the trend of institutional adoption led by stablecoin settlement. Post-quantum solutions enter the arms race. Multiple reports point to a clear trend: preparations against quantum threats are accelerating among developer communities for Bitcoin, Ethereum, and others. Engineering migration: reports on post-quantum blockchains indicate a shift from theoretical cryptographic research to engineering migration and roadmap selection. Key focus for teams: short-term priorities include the implementation timeline for post-quantum capabilities, migration costs for existing chains/contracts/key systems, and the trade-off between security and performance. Crypto and blockchain stocks, potential pivots for the next cycle. Articles emphasize that for those bullish on crypto-related stocks, one or more pivots will determine the direction of the next market cycle. Driving variables: while specific pivot points were not detailed, the consensus points to regulatory progress, shifts in on-chain/off-chain demand, liquidity, and the maturity of infrastructure. Recommendation: monitor industry announcements and on-chain data to verify if these pivots are forming sustainable trends rather than temporary narratives. Cross-border spillover: crypto and real-world procurement. Reports mention crypto assets being used for drone procurement, specifically naming regions like Russia and Iran. Geopolitical impact: this highlights the spillover effect of crypto in global supply chains. When traditional financial channels are restricted, decentralized value transfer tools are increasingly integrated. Risk control: this necessitates heightened compliance, auditing, and transaction monitoring for both regulators and enterprises. Institutional stablecoin settlement: focus on the Solana ecosystem. Information highlights the Solana ecosystem, noting that the SBI Group, via B2C2 and other paths, is pivoting toward blockchain for pioneering institutional stablecoin settlement. From experiment to utility, the value lies in moving from decentralized experiments to institutional-grade settlement, measured by efficiency, clearing costs, and regulatory controllability. Market synergy: this aligns with the next cycle pivots mentioned above, as foundational financial scenarios like stablecoin settlement mature, the certainty for capital and application strengthens. Ethereum, ETH, briefing. Market dynamics: ETH saw a 3% rise, attributed to whale buying and a supply squeeze. Institutional targets: Standard Chartered raised its ETH price target to $7,500, reflecting a repricing of the medium-term growth slope. Long-term vision: some analysts speculate ETH could reach $22,000 by 2030, with co-founders even suggesting a potential 100x leap, though these remain aggressive best-case scenarios. Identity crisis: major industry conferences are exposing an identity crisis as the sector struggles to balance its technical versus financial roles. Bitcoin, BTC, briefing. Support levels: BTC dropped to the $66,000 range. Breaking this support could trigger further downside, though Goldman Sachs suggests the bottom is near. On-chain pressure: nearly half of the BTC supply is currently at a loss, indicating significant market pressure and potential sell-side resistance during rebounds. ETF inflows: positive signals emerged as Bitcoin ETFs recorded their first monthly net inflow since October, suggesting institutional wait-and-see capital is beginning to enter. Solana, SOL, briefing. Security breach: the DeFi platform Drift suffered a $280 million hack, highlighting the urgent need for better risk control in the ecosystem. Market pressure: SOL is facing downward pressure as geopolitical risks outweigh the benefits of its payment and AI narratives. Policy shift: the Solana Policy Institute notes that crypto policy is entering a new phase, implying upcoming shifts in regulatory frameworks. Key figures and ecosystem updates. Satoshi Nakamoto/Quantum Risk: discussions resurfaced regarding Satoshi's 2010 warnings about quantum threats, as reports suggest nearly 7 million BTC could eventually be at risk. Vitalik Buterin, focused on private and secure AI stacks, cleaning up meme coin clutter in the ecosystem, and maintaining a firm stance on ETH's long-term roadmap. Changpeng Zhao, CZ clarified that the Binance versus Solana meme coin strategies are due to different ecosystem mechanisms. He urged the industry not to fear quantum computing but to focus on upgrading protocols. Brian Armstrong, Coinbase pledged personal oversight on future-proofing Bitcoin against quantum threats. Coinbase also clarified it has no intention of becoming a bank, despite regulatory interactions with the OCC. Gavin Wood, Polkadot released the RevX beta, though the DOT token has seen a significant 97% retracement from its all-time high. Joseph Lubin, ConsenSys defended DeFi security while warning that Bitcoin might be entering a crisis phase. He highlighted the economic zone plan to fix rollup fragmentation. Jihan Wu, Bitdeer is expanding into AI with a planned 180 megawatts data center in Norway, driving a positive market re-evaluation of the company. Conclusion and outlook. In the short term, the blockchain narrative will be dominated by the engineering of post-quantum security, the scalability of institutional stablecoin settlement, and regulatory compliance regarding real-world asset flows. Investors should track these three parallel lines: technical security, institutional adoption, and regulatory risk, to identify the true signals of the next cycle.